A long lower wick on a weekly chart. What does that mean from a buying pressure standpoint on today's market brief? So we're in a bit of a unique scenario in the fact that we saw a long lower wick the last 2 weeks in a row on our weekly candlesticks. And so I want to take today to really talk about what long lower wicks mean and why they're important. A very short session today, not a whole lot, but I think an important session for people to see how do I use candlesticks going forward. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. But what is a wick, right? A wick, I call wicks like footprints in the snow. That's really what they are. If I know that it snowed outside and I want to look and see if the mails come, I may not watch my neighbor go to the mailbox, but I'm going to see if his footprints went out to the mailbox and came back in. And if his footprints went out to the mailbox and came back in, I didn't have to see him go to know that there was a history of him going that direction and then coming back. I think of a wick a lot like that when we talk about candlesticks. Candlesticks are really made up of two parts, the body and the wick. And the wick shows me where price went over a given period of time but was unable to stay. Now, the inability to stay is really the key that we want to care about. And so that means that if I've got a candlestick with a wick that's below the body, that means that we went down, but we were unable to stay down. And the sellers were unable to maintain their dominance, their control over that period of time. If I have a body with a long upper wick, that means that price went up, but it was unable to stay up and then came back down. And so that means that buyers were in control, but they were unable to maintain that dominance. And so what does that mean? Well, from a pure momentum standpoint, it is something to pay attention to. So let's take a look real quick at the weekly chart. So here is a weekly chart of the S&P 500. And when we look at the weekly chart, we know that each candlestick represents 1 week's worth of price action. And what we can see over the last few weeks is that we have two consecutive lower highs and two consecutive lower lows. So by having those two consecutive lower highs as well as those two consecutive lower lows, we've basically put ourselves in the beginnings of a downward trend. Now, how long does that downward trend last? It lasts until it doesn't. I'd love to give you a better answer to that. But one way that we can use to gauge where price may change from a momentum perspective are when we see lower wicks like we've seen the last 2 weeks. And zooming in on that a little bit, those two lower wicks mean the price came all the way down here but was unable to hold those lows. It was unable to hold those lows. Whereas if I look at the prior couple of weeks, and in those prior couple of weeks, we can see that we closed on the low this week. We closed on the low this week. In strong down weeks, oftentimes we're going to close on the low. These lower wicks mean that we were unable to close on the low, and we in fact came back up. Now that in amongst itself is not a reason to enter a position. Matter of fact, we saw that happen here and here in the past. We also saw it here and here. But you notice those long lower wicks, in order for price to really give you a follow through, they have to be followed by a higher high in the next week. Right? They must be hired by a higher high in the next week. And so as I can see, this week we have put in a slightly higher high than last week's high. So as of yesterday, we put in a slightly higher high than last week's high. Now, if you recall correctly, a couple of weeks ago, we had talked about our moving average, the 8 and the 20 system for moving averages. And we can see that in our 8 and 20 system for moving averages, we are still well below the 8-period moving average. And so that is a bit of a sign of caution for the SPX. If I look at the NDX, we are actually above the 8-period moving average. And we got a candlestick that's slightly higher than the prior high. So what does this all mean for you? Well, overall, my anticipation, while I'm a big believer in following trend, I am still net bearish with my overall trend. But I'm willing to take some exposure to get back in a little early. I'd rather get back in a little bit early than sit on the sidelines too long. And so what does it mean to get back in a little too early? Well, what it means is that I might be willing to have an entry. Now we've moved to a daily chart. I might be willing to have an entry, just simply based upon the fact that we got that slightly higher high, but my stop would go below last week's low. Meaning if I drop below here, I'm definitely going to be out. And I'm not going to allow myself to hold on to a losing position too long. This gives me a very small window to be wrong. And if we put in a higher high this week, then I will move that stop up underneath this week's low after it's been created. Now, I will say that there's a bit of supply up here that I think becomes a pretty good target, and so an area that I think we could theoretically run up to that region. So keep an eye for a potential bullish momentum, just primarily due to these lower wicks that we see. And if you go back historically, they don't always work. For example, here's a great example of a long lower wick on a weekly chart that the very next candlesticks continue to come down. But then here's examples of long lower wicks where the next few went up. And so I think what it really comes down to is historically long lower wicks mean that there's more buying pressure that is available. And that buying pressure should cause price to rally up. Does it always? Absolutely not. And certainly not a foolproof method to identify opportunities, but a good opportunity to maybe get into some early adopters. Maybe this is where you look at some of your technology positions as an early adopter entry. And October can be a volatile month. There's no doubt about it. But it's also oftentimes the starting month of what leads us into an end of the year rally. So I'm willing to put a little bit of risk capital out there to see what do we do, but with a tight stop on those. So hopefully this helps you a little bit and assists you a bit in your trading. If you have any questions, as always, reach out, let us know. Support@TradersArmy.com. Until tomorrow, everybody, I'll talk to you soon. See ya.